All right, welcome back to the channel. We have a lot to talk about when it comes to the Nasdaq, the S&P. What happened today? This absolute drop. How did we know this was going to happen going into yesterday? Why were we bearish? And what does this mean for the market going into next week? But before we get into that, I ask you to do two things. Hit the like and also consider subscribing. I'm posting videos every single day about the market, how we're moving, key news you need to know. And I'm also giving you the educational content as well. But every single day around 5 to 7 p.m. Central, I'm giving you the videos that you need about the market and how to make money throughout this market and what you need to be looking at. So let's get to the content. Today's video is going to be pretty short and to the point. I'm not going to go too much into news. There wasn't really any news to talk about. But going into yesterday, we're looking at how you moved. So this was basically yesterday's movement. You came out and you got a nice push to the upside. So if we look about yesterday, you pretty much just traded in a straight channel all the way up all day long. You had a little bit of a breakdown, but you ultimately just kept on turning. If you look at the Nasdaq, you started to hit those local highs at roughly 14.25, 14.27, and then today you kind of continued that. And then, it started to happen. Markets actually opened up, and this is where the story really begins. But what I want to do is take a look at liquidity and what the hedge funds were doing early on in the day. All right, so what we're going to do is look at ES and look at the actual futures when it comes to the S&P and the Nasdaq and show you what was going on here. And we had that $4,400 level we talked about yesterday. If that thing broke, it was going to get nasty. I'm going to show you what was happening. So coming in today, your cumulative volume delta was positive. You were churning to the upside, and then you started taking a turn quite for the worst around 11 a.m. and that thing just went down. You can see constantly throughout the day, sellers were taking control, and then eventually around right here, which was about 130, give or take, that went negative. Once that happened, that's when we started to see a major drop off, which we'll cover here in a second. And that's where the sellers took control and broke through that 4,400 resistance on ES, pushing to the downside. But I want to point out something really, really interesting throughout the day as well. On the iceberg orders, the hidden buy orders from hedge funds, you were seeing a lot of upside buying. So that means that when you were actually getting these pushes and even some of the dips, hedge funds were buying. Specifically at the end of the day, you were getting a lot of these big orders being filled that were hidden on the order book. It's worth mentioning CVD continued down, but at the end of the day, you started to see it start to curl back up. And that's where we have a little bit of questions going into next week. When we look at liquidity, we come back and we can see around that 130, 230 range right here. Look what happened. You took an absolute dump. You broke through that support. You couldn't hold at 14 flat, and boom, it happened. Going into yesterday, we were targeting, we said if you got above 14.3, you were going to be very bullish. But if you held below, you were going to push down. Guess what happened? You pushed down. Right now, you're in favor of testing 13.75 as long as you're below this range right here. So as long as you stay below this local range, yes, as long as you stay below it, you are what? You are bearish. So if the Nasdaq stays below this, I'm projecting you're going to touch this range of 13.75. If you break below there, it's looking absolutely abysmal because this is your bottom. This is where you got to hold. If you don't hold there, it's going to get bad. So you are breaking below key levels and you're looking very bearish right now. For the bullish outlook going into day trading for next week, you got to start seeing a mount of this level. If you start to mount there, if you start to get this type of price action, I would flip bullish and I'd be targeting that range once again. But let's look at the S&P. Now, what I'm looking at here is going to be just specifically the SPY and how this was traded throughout the day. And again, you can already see I already have it marked out down here. So looking at this range, this is our bottom line, this 435. Going into yesterday, what do we have marked out? You have that top line resistance where you ended the trading day right there. You came out open, you retested, instant rejection, pushing down. Throughout the day as well, buying volume declining across the board. There's no reason to go into crazy indicators or anything like that. All you need to be looking at is key price action ranges and then looking at volume. End of the day, look at that selling. Now that could be an instance of why you saw CVD dumping and then as well as why you saw iceberg orders getting filled up. So this was actually hedge funds selling into other hedge funds. That could be the answer there. And if this is the case going into next week, if you break below 435, this is going to be nasty, and you're going to be expecting that touch of the 425, 426 region. However, we have to assume that this is going to hold as a support. If 435 breaks as a support, you're looking very, very bad. That's going to be the key and crucial thing here. You got to hold 435 to remain any type of bullish, get any type of bounce. But as of right now, you can see coming to this range, we had two levels marked. You broke down, you tested number one and came straight to test number two, 440. You bounced up a VWAP, got rejected at VWAP and kept coming down, never getting back above VWAP, indicating yes, you are in a bear trend. I'm sorry to say it. You continue to move in this trend. How did yields move? Before we go any further, I do want to give a shout out to the sponsor of this video and one of the sponsors of the channel, Margex. Now, I've been using these guys for a while now, and I use them personally for any of my Bitcoin trading. I've been doing a little bit of the day trading when it comes to Bitcoin as well, sometimes late at night or after market closes when I like how the market is moving and I'm not trading futures. And this is exactly what the platform looks like. Now you can see above here, you have Ethereum, Ripple, Litecoin, EOS, ADA, and all these other type of cryptos you can trade with leverage and margin, specifically to the dollar, which is something that I like to personally do. Now, when crypto stocks or anything like that are moving up, going down, it can kind of be complicated. But when it comes to Bitcoin, it's super simple. You can use your leverage. You can go all the way down to 5x, all the way to 100x. You want to give it even further down to 2x, you can do that as well. And it's very easy to manage. And I also like to be able to keep my stuff if I want into USDT, so I don't have to really worry about how the market's moving if I'm not even trading right now, which is typically what I'm doing. So right now I have a little bit actually in cold storage, but I also have a lot in Bitcoin as well, because I do see potentially a little bit of upside over the next few hours as well. And I can always switch that right over to USDT whenever I want. All in all, if you are interested, you will get a little bit of a bonus if you do sign up with them. The link will be down below. Again, this is just for Bitcoin and crypto trading for me personally, and this is what I use. But let's get back to the video. So if you haven't been watching the channel and you didn't watch yesterday's video, I recommend you go and watch yesterday's video. But you can see yields are inverting. They're at these highs. So as we zoom in here on the day, what happened? Yields came down the past 2 days, and today what happened? Boom, you're shooting right back up. What is it saying? That inflation is not dead. You are still inverting on yields. Yields are cueing a pullback. They are cueing a recession. Yesterday, we really went into depth. I'll probably make another video going back in depth in that and giving you an overall update regarding mortgage rates and things like that. However, we need to look at this and say, guess what? You are still in this pinnacle range. You are still holding above the monthly. You're still holding at 0.95. Yields are scary. It's just getting started. Going back to 2018, how long did you sit in this range before you started really pulling back? It was about 4 months you sat in this range, and then guess what happened? Boom, downside. Looking at the comparison here, how does it compare when we look here? We're going to add the SPY, no tricks, nothing like that. We're just adding it right here, adding it to the scale. The last time we were in this range, you had a little bit of chop right there, and then boom, you started coming down, and then it really started to hit there. Coming into this, you started seeing chop coming into this, but we talked about it yesterday. What was going on? Why were you chopping down on SPY? This was all from Russia and Ukraine. This hasn't even been affected by yields. This hasn't even been affected by inflation. I'm telling you, things are heating up. Things are getting very serious here, and I could see a massive, massive dip on SPY compared to yields, and we have seen this happen previously in the past. I mean, look, go do your own DD. Look at how it's moved previously. This is what happens. You top off, and then boom, you take these big dips. You need to go all the way back to 2008 and look how gross this one was. This is more of what I expect, an absolutely massive dip and stocks to absolutely start hurting in a hurry. I'm telling you, you need to keep this on your radar. The US 10 to 30-year yield, that's the big boy, and that's going to be your indicator for that reversal, and it's already what we're seeing. So you need to remember, you might see some upside in the near term, but as far as long term, this is what you got to look at, because this is showing you are starting a bear trend right now. The last thing I'm going to leave you with before I hop out of here for the week, this is going to be the gold chart. I'm just going to take these indicators off so you can see very clearly. And as we look here, this is how gold looks. This is spot gold, gold to the dollar. It is a cup and handle. That's exactly what it is. If you're looking at this, it's exactly what it is. It is a cup. It is a cup and handle. The last time you saw this was back here. It's the same exact movement that you saw right here. What happened? You had your cup, you came down, handle, and then boom, you shot up like crazy. What's happening here? You have your cup going on here, you're dipping down, have your handle forming, and it's getting ready to shoot up. Gold is absolutely bullish, and this is another telltale sign you are getting ready for a market pullback. People, keep this on your radar. I'm telling you, this is my only safe longer term play right now is gold. As far as everything else, I'm day trading in and out of stocks all the time, but as of right now, this is what I'm looking at. That is going to wrap the video up, though. If you got anything out of this, I recommend liking and subscribing. More content is coming every single day. I have educational content. I have content regarding actual stocks and how I'm trading. And then I'm starting a new segment as well on the weekends, going over how I'm doing my daily trading. And I'll be having a 5K challenge to see how we can grow that as a group, as a Discord, on the Twitter and everything like that as well, going over all the trades I'm taking and the adjustments I'm making in the market as well. That will be started this Sunday coming out. Again, like, subscribe for more content. We make videos every day, 5 p.m. to 7 p.m. Central. Have a good one.